Welcome to the Energy Experience powered by Ag Valley Co-op. I'm David Dodson, Vice President of Energy at Ag Valley, bringing you this week's expert analysis of the energy markets. India and the U.S. have resumed trade talks this week, with India pledging to boost imports of American energy and gas to ease concerns over its Russian oil purchases. Talks had stalled in August due to U.S. tariff hikes on Indian goods, but resumed after a phone call between President Trump and Prime Minister Modi signaled a shift toward cooperation. Both nations are now aiming for a trade deal, with discussions focusing on sectors like renewable energy, LNG, and India making investments in the U.S. In turn, they would be seeking relief from tariffs that have impacted key exports. Oil price has rebounded slightly this morning after 2 weeks of decline, and slightly is a relative term. They have taken off, went to the races, and haven't looked back, and we'll get to that in a minute. WTI crude dropped $2 a barrel last week and $2.61 just on Friday. So due to rising U.S.-China trade tensions, where President Trump announced new tariffs and export controls following China's plans for broad export restrictions, but suggested markets may stabilize, both countries are expected to resume their trade dispute November 1. U.S. sanctions may lead to lower refinery output in China, though China is likely to shift crude supplies to other facilities, with Iran projected to be the top supplier of crude to China in 2025. Despite new Chinese controls on rare earth exports and further U.S. tariff threats, officials from both sides remain in communication ahead of the planned meeting between Trump and Xi Jinping at the OPEC summit. Experts anticipate a temporary extension of tariff pauses, some concessions, and acknowledge uncertainty remains over future negotiations. OPEC has done OPEC things. So OPEC has maintained the global oil demand growth forecast for 2025 into 2026. And the group, including Russia and other allies, is accelerating the unwinding of production cuts, leading to increased crude supply and downward pressure on prices. So if we've looked at crude oil last week, it closed at below $59. And again, I've said in the past that 62 is going to be the benchmark. So anything around that or below is probably a buy signal for us and the business that we're in. So with that being said, at 1:30 today, WTI November crude is up 69 cents, trading at 59.59. Diesel fuel is up 4.86. And RBOB New York Harbor gasoline up 2.64. Propane doesn't usually play ball with gas and diesel, and it is trading down $0.0175. Thank you for joining us for this week's Energy Experience powered by Ag Valley Co-op. I hope you found the information valuable. Stay tuned for more updates, where we will continue to bring you the latest trends in the energy markets.